Alright traders, my name is John Paul, daytradetowin.com. This is video 205, how to filter trades for higher success. In video 1, I did a brief review of indicators and how they lag. I touched on price action, and in this video I want to concentrate on showing you how I filter trades on the long side. Alright, so if you haven't seen video 1 as of yet, you should start with video 1 and then you can watch this video too. Let's enter and filter a trade on the long side, okay? The entry in this example is long, obviously. As mentioned in the previous video, we know in advance where, when, and why we are taking the trade. If we don't know why, where, and when we're taking the trade, then filtering a trade is obviously not going to work for you. So you need to know in advance why you're entering the trade. Now in filtering a trade, let's look not only at the entry price, 1104 quarter, but what occurs once the market actually touches that price or hits that entry point. I'm not going into detail here in these videos on the entries because they're discussed in the course, but I am going to show you the filtering method itself, okay? Now, with this long example, the market makes its move and tags our entry price 1104 quarter, so it actually touches our price. So now we look to see how we filter this trade. At this point, we don't do anything. We do not enter the market at this point. We are waiting for confirmation. Okay, this is where the filtering comes into play. Let's filter the trade now and wait for price to confirm direction. Alright, so we wait and see. We're patient. We want to actually see where price closes, where this bar closes. So we're not entering the trade yet, guys. We are actually just holding on a second to see where the candle is going to close. Okay? And as you can see, I'm not using any indicators whatsoever on the chart. All I'm using is price and price action only. Now, we want to wait for the candle or the price bar to close and post. Now, after the bar has posted a closing price, we see that it has closed and opened on the same exact price, 1104 quarter. Okay, I have it indicated here on the chart. Now, what do? Do we go long? Do we stay on the sidelines? What do we do? Well, I picked this particular setup. It happens to be February 19th. I picked this specific chart on purpose to show you what we do. In fact, we don't enter the trade. In filtering the trade, we are waiting for a specific reason to go long. Okay, we know our entry, but now we're filtering it. And the reason why or when we would go long this market is we're going to wait for price action to show us and prove to us a direction that it wants to go long. It has to show us and prove to us that it wants to take the long side of the market, not the short. Now, since the closing price did not close above 1104 quarter, but instead closed on the same price, we don't enter this trade. Okay? We're going to wait for the following bar. We're going to wait for the following bar to post and close, and what we really want to see is a close above 1104 quarter. Now, in order to enter long, we need to have the close of the following candle be above our entry price of 1104 quarter. And this did not occur. It actually closed and opened on the same price, 1104 quarter. So the next step, what do? Well, we're going to wait for the next bar. And the next bar, the price posted a close below 1104 quarter. So in actuality, we're not entering long this market. Okay? The next bar posted a close lower than 1104 quarter, so we don't do anything. In filtering a trade, we are waiting for the subsequent bars or candle to close above our price, 1104 quarter, which it did not. I have here an arrow pointing to the second and third bar here, okay? So we don't enter this trade long, guys, okay? This bar right here did not close above 1104 quarter, and this bar here did not close above 1104 quarter. So the confirmation to enter long and filtering this trade really occurred on the third bar after we got hit or tagged 1104 quarter. The market makes its move on the third candle or bar I have here marked with the green arrow. The candle or bar posted a close above 1104 quarter. Okay? As you can see right there. Price action, not an indicator, is confirming to us that price is indeed continuing in our anticipated long direction. So we knew in advance, ahead of time, that 1104 quarter was where we wanted to go long. But not only that, we also filtered this trade and only entered long after the next candle closed above or posted a closing price above 1104 quarter. At this point, we entered the market long. So in filtering this trade, we are confirming with price action that the market is indeed going long, and price is proving to us that it is going long. So let price show you, not an indicator, but using price itself, we have now filtered this trade to the long side. Price action confirmed that it wanted to go long, and indeed it did, as you can see right there. This was a profitable trade, no doubt about it. In filtering a trade, we always wait for price to confirm its direction, and we only enter after it does so. Price could have blown right past our entry to the downside. It could have, at this point right here, just went straight down. So filled this 1104 quarter and then just took a dive, nosedive. So in filtering a trade, we avoid those situations where price doesn't even consider going long and just reverses on us and stops us out. So what I'm showing you in filtering the trades is really a way to minimize those losses. Filtering trades must occur only after you know your entry price. Okay? Once our entry price is reached, we wait for price to close above it. In this case, or example, it was a long trade, allowing for price to confirm direction. Now, if price continues higher, you have a chance to exit with profit. And this is what I call setting it up for a high probability trade by filtering it. Now, an important fact to remember is if after you filter a trade, price goes against you, and sometimes it does, obviously, be sure to exit the trade after 1 or 2 bars of lower closings. That way, you gave it a chance, you filtered the trade, but yet you're not leaving a large stop. You're only allowing price to go 1 or 2 candles against you in your direction instead of waiting for a big move to the downside. Alright, now follow me to the next video. I'm going to demonstrate more filtering techniques